Good morning, everyone. Welcome to our half-year results presentation for first half of FY22. We'll be going through the slide deck that we put up on the ASX yesterday afternoon. If anyone wants to ask questions at any point, please use the Q&A function in Zoom. You're also welcome to always email through to investors@rent.com.au for any questions at any time. So shoot through the questions as you have them. We will rattle through and then open up for some questions after the presentation as well. But I'll just hand over to our CEO, Greg Ferreira, to start taking us through the presentation.
Thanks, Jan. And yeah, please, if anybody's got any questions, investors@rent.com.au. Jan and I both monitor that, and you know, we're probably having 2 or 3 chats a week with people. So more than happy to go through stuff in more detail. I'm on the summary slide there. So I guess the highlights are it's the best half we've ever had for the business. And, you know, we're coming to you from WA, which is the king of closed borders, but we've seen various restrictions across the market over the last 6 months. The number of people moving and the number of properties available for rent are at all-time lows in Australia. So it's a bloody tough market out there for renters. We continue to invest in rent pay. It's not only a logical extension of our core business, but it's just presents such a much greater opportunity in terms of the addressable market, and we'll cover some more of that as we go through the pack. Big slide. It's really interesting, and I think personally as a society we're only just starting to comprehend this change in Australia. I mean, housing affordability obviously is a huge part of it, especially Sydney, but I tend to think there's much more to it than that. People today are seeking a better lifestyle balance. They want flexibility, where they live, how they live, and these are the sort of features that renting tends to offer. Renters now make up over 30% of our population. It's growing each year. And what's really interesting is the actual change in the demographic. So they're younger, they're typically better educated, they're more likely to change their jobs, their cities, their countries. And these are the ones that actually value the flexibility that renting can offer. What's interesting too is they're also the most financially literate generation we've had. And they see a mortgage as just one of the methods to build wealth. People my age, it was your only choice, but today there are so many others. And given the high entry costs, restricted liquidity, etc., they're starting to look at other vehicles. And you know, these are the ones behind the growth in crypto, equity platforms like Stake and Raise, etc. So they're able to build their wealth, they're able to start and continue to invest, but they don't need to sacrifice any lifestyle or flexibility to do that. And this is the sort of change I think we're seeing. And I just, as I said, I just don't think as a society we've really got our heads around that yet. This is our reason for being. Our mission is to remove the stigma and the complexity out of renting. So rent.com.au does this by offering great tools and services when you're in the search phase. When you've found your place, RentPay offers you the flexibility, and the key part of RentPay is actually putting your rent money to work for you. So we do that via technology. No other portal offers the features like we do: walkability, NBN, lifestyle. I've mentioned before that we have about 25% of our users on the app actually using lifestyle as a method of search rather than traditional postcode. And these features are all designed to allow a customer to make an informed decision, compare areas, suburbs, work out what's best for them. A better informed renter is more likely to stay in a place longer. It actually ends up as a better solution, both financially and effort-wise for the landlord and or the agent. Supported by a host of products, they're designed to help you stand out from the crowd, help you move, all those sort of things. So we're really proud of that little package of what we've put together on rent.com.au. I'd like to say it's more complex, but it's not. We listen to our customers. We include them in our product design, our service development, and our reward is that we're now the largest dedicated renting portal in the country. We're also the #1 rated real estate app in the country. So really proud of that. And, we're going from strength to strength. We've mentioned this a couple of times. So we started with rent.com.au. We've got that business profitable now. We're really happy with that. We've got product adoption rates are improving, which is really good considering we're in a somewhat of a depressed market in terms of the number of listings and the number of people moving. Strong advertising. We mentioned in our last presentation how we've deliberately been moving our advertisers onto longer term contracts rather than a little bit here and there. And that's working out well for both parties. And we continue to be focused on cost control. We're only 25 staff, small business, and we're starting to hit some really good goals. Yeah, so this slide just covers that in a little bit more detail, but I guess our product adoption, whether that's actual products, whether that's our renter resume, which is now pushing on 1.3 million, whether it's our inquiries and applications through to agents, all of those are increasing as a percentage of our traffic. I've mentioned before that people moving is a little bit down, but we've seen the overall lift despite that. This slide we use every time and we try to use it to explain what we're doing. So the portal's where we started. We invented Renter Resume, first a bunch of lifestyle features, walkability, NBN, and all those sort of things. So my point here is that we are not afraid to be different. We're not afraid to disrupt. And we've done that, and we've built, our rent bond product now is the largest product in the market for helping people transition financially on their move. So we want to take that same attitude into RentPay. So the key difference of RentPay over rent.com.au in terms of the customers is that it gives us a much larger market. Only 5% of renters are moving at any point in time. So there's 95% that are sitting there happily in their property. We also get to play with them over a much greater period. The average tenancy is about 30 months, and RentPay is applicable to any of these people at any point in time. So it really opens up the entire market for us. This is kind of the essence of RentPay, and we've chosen to explain it just to try and explain the product a little bit better. But we provide flexibility and choice to the renter, but consistency and certainty to the agents. So not surprisingly, an agent's preference is for everyone to be doing the same thing, right? Makes sense, simplifies their business, makes it easy to reconcile. But that doesn't always suit a renter. They want choices and they want options. So there's 9 different scenarios where people can transition from weekly to fortnightly, et cetera, et cetera. We have customers using every one of these. And it's really interesting to see how people morph from what the agent was expecting to what they want to do. Obviously, we have certainty to the agent. The agent still gets their money the right amount at the right time. What's interesting too, we also have a sizable number of customers that are choosing to completely break the calendar, if you like, and they now synchronize their rent to their payday. For many people, rent is their largest expense. So putting that money, pay goes into your bank, putting that into a separate wallet allows that expense to be parked, used, and away you go. So we're really proud that people are starting to use all these. Flexibility obviously also applies to payment methods, and there's a few on the table there. You'll be seeing our options in this area increase over the year. There's a lot of work going on in that space. We already offer NPP, or instant payments, if you like, out to the agent. That in itself is a feature. There's always been this level of angst between a renter and an agent when the renter's paid, the agent's sitting there hitting refresh, hasn't got the money in their account yet because it can take up to a couple of days. So NPP removes that. When you see that money leave your wallet, it's in the agent's account. Perfect. So the banking rails in Australia continue to evolve. We're not quite there yet, but we certainly anticipate being one of the early adopters of the inbound instant payments. That to us is the holy grail, where money can move between accounts instantly, and that's where we're heading. On top of all this, I guess we've got some features that are not only Australian first, but some of these are world first. We're really proud of this. So we're already seeing that there's things like the buffer. Over 40% of our customers were asking for a buffer. And you know, it might seem counterintuitive that people want to pay a little bit extra, but when you look at casualisation in the workforce, COVID has potentially accelerated or exacerbated some of that. So we've got people that have a casual income source, so they want to get a little bit ahead so that when they take a holiday, or if they're not going to have an income source in a month or 2 months, they know that their rent's covered. We were the first in market to bring in score building. And this is the first of many, I guess, flavors of this product where your rent money is working for you. So each time you pay your rent, we increment your credit score positively. So it's rewarding a customer, it's recognizing a customer. And this is an area you'll see us really focus on with the development of RentPay as we go forward. Safety net's in there. Not a huge adoption of the product, and it's primarily it was put there as an emergency feature. The concern here is that someone will, you know, the car will blow up on Tuesday, rent's due on Friday. The penalty, if you like, for missing a rental payment can be quite severe for a customer. And with such a tight rental market, getting a new property is tough, etc. So the safety net feature allows you to draw down emergency funds, rent's covered, and then you pay it back in 4 installments. So it's you know, it's a bit of a buy now, pay later type flavor product, but its point there is that it provides people emergency option if they need it. This is really exciting, this part, and we've spoken about this before. There's a lot of discussion ongoing. We do see RentPay becoming a bit of a platform for services. These are accelerators, if you like, and they'll build value back to us, to the partner, and most importantly, back to the renter. So utilities are something really obvious. We, you know, most people pay quarterly. You got 30 days to pay. So synchronizing, prepaying your utilities, if you like, in smaller parts in line with your rent delivers huge cash flow bonuses back to the utility company, and we'd expect some of that to flow back to the consumer. We're already taking the money out, we've already got the authorities and whatnot in place, so it's not a complex thing to do. The mortgage one's really interesting. I mean, there's the whole world of mortgages is changing from, you know, traditional banks and brokers. Now we've got a lot of online portals. We have a unique data set with RentPay. We know a lot more about our customer financially. So is there a way here to, if you like, recognize our customer that for some will transition into mortgage in 1 year, 2 year, 5 years, some never will. But is there a way to pre-align a customer to a future mortgage provider? We think that's a really interesting, it's never really been done before, but this is part of our, I guess, reason for being. We want to do things a little bit differently. We want to shake up the rental market. We want your rent money to count for something other than just paying off the landlord's mortgage. RentPay, we're early days. We've added over 500 customers in the last month. We're doing $1 million in rent each month now. In each week now. So we're starting to get some strong growth. Agents have been interesting. We're onboarding probably 2 or 3 agents a week now. They're approaching us. We're obviously got a couple of very large agents that we've previously announced that we're working through. So really pleased. There's a bunch of work going on RentPay. I don't know if anybody's noticed, but if you update your RentPay app on your phone, you'll see we've now switched to a light mode. A lot of customer feedback and whatnot around that, and that's the first iteration. We're currently working on a completely new onboarding flow for RentPay. At the moment, to get up and running on RentPay is about 50 screens. We know there's a lot of bits we have to do around KYC and AML, etc., ID, but we've worked out a way to shrink that to less than half, and then we're designing a completely new dashboard, pardon me, experience. So already we're into the 2nd generation, 3rd generation thinking of RentPay. So really, really pleased with the performance of this and where we're going. Might now hand over to Jan to cover off the financials in a little bit more detail.
Thanks, Greg. Firstly, just want to reiterate, you can see sort of from the chart on the left-hand side that we've had record revenue half. The second half of each financial year is typically the strongest half because it includes the moving peak between January and March. So it was particularly pleasing for us that despite sort of lockdowns and things like that, which stopped a lot of people moving, we were still able to exceed not only the same half in FY21, but also the January to June half last year. So very pleasing result there. In terms of EBITDA, so increased EBITDA from the search business up to 137K for this half. And we continue our investment into RentPay as Greg has previously discussed. Looking sort of more deeply at the revenue, rental products would drop by just over $100,000 compared to the same half in the previous year. In large part, this was due to just the drop in market metrics. You can see from the chart there that rental properties are down sort of anywhere between sort of 20 and 30% at different times during the year. And that reflected in terms of the number of people searching. So the fact that we were able to bring it in within just that 100K drop from the previous year was very good result, particularly when you notice that more renters as a percentage of traffic were actually transacting on our products, which bodes well for this next half, where we expect there to be a lot more mobility. The revenue result was underpinned by advertising sales growth. So we've, as Greg mentioned previously, we've been really focused on making sure that we deliver value to our clients, get into longer term agreements, and that has helped us push through. And so that was almost a 50% increase on the same half the previous year. From an EBITDA perspective, so this improvement in the search EBITDA was driven probably half by increased revenue. There obviously comes a cost of sales with that as well, but so increased margin drove about half of that, and then we've been really managing our costs very tightly through this period, and that's driven probably the other half of the improvement in search EBITDA. The increased investment into RentPay, so that increased 652,000, reflecting the fact that in the previous comparable period, RentPay wasn't operational except for probably about a month or so of it. So this just reflects the fact that we brought additional people into the business to operate what is actually a pretty complex product. We've also spent some money on marketing. The pleasing thing for us, though, is that the RentPay platform is not at scale. As it scales, we don't expect those costs to increase. So we've got the people that we need to operate the business now, and probably a fair bit of growth included in that. So we expect that to improve in time. Greg, I'll just hand back to you to summarize.
Yep. Thanks, Jan. So yeah, look, it's a great half. We're strapping in for this half. We're starting to see some movement, some positive movement in terms of product sales and whatnot so far. And yeah, we're continuing to strap in. There's just it's hard for me to kind of get across how much effort and how much work we're going through at the moment in terms of continued investment in RentPay. I'm continue to be extremely bullish on RentPay. I do see that as a wealth engine for our business. It's an area that has minimal competition. It's a massive market, and we're doing things that no one has ever done before. So we're not shying away from that investment. We'll continue to do it. New partner discussions are continuing. Our profile raises every quarter. Our profile raises, and we have conversations with people that probably wouldn't have been able to do 12 months prior to that. So that's going really well. We're keeping an eye out on the industry. There's not just in our area, but in fintech generally, there's obviously quite a bit of talk around consolidation and whatnot. We do see some opportunities in there. There are some technology pieces missing from our roadmap that we may choose to purchase or partner rather than build ourselves. And that just comes down to cost benefit. We've got a pretty full product development timeline. So if we can grab something on market that's accretive to our business plans, then we'll certainly look at do that. So yeah, look, great half. Staff going well. We're running a combination of work from home, in office as long as we can. For those that are not aware, we're in WA. We've had a pretty good run. We've been in the office pretty well continuously, but cases are growing this side of the border at the moment. So it's likely that we'll probably I need to work from home for a bit over the next month or so. But yeah, things are going really well. We're looking forward to be able to get back on a plane and get over to the East Coast. And I'd suggest probably next time we'll do something face-to-face in Sydney or Melbourne. Happy to take questions. As I said, I don't know if we've got any questions come through yet.
Yeah, we've got quite a few.
Okay, well, why don't we rattle through those? And once again, if the answer's not, I realise we're time bound, but more than happy to take one-on-ones through our investor channel.
First question's from Michael. I've noticed that Rent is looking to move into the mortgage space. Is this dependent on one of your partners getting their banking license from APRA? I'm guessing that's a Novarti question, but do you want to answer that?
So first part of the question is, yes, we see a real opportunity in the mortgage space. So think about, it's quite interesting, and I know one of us at the table has just refinanced their mortgage, so we're familiar with the process, but it is really competitive out there at the moment. And if we subscribe to the media's view that housing prices are probably going to come off and there'll be less mortgages, it's going to become more competitive. What the interesting thing is, we have people that are actively saving for a mortgage right now that have not yet entered the mortgage market. So there must be a way where we can align that customer to a future provider. Now, that future provider has various mechanisms so they can provide value back to our renter. Imagine a scenario where someone's got a $30,000 deposit in a savings account with Bank X, and each week they're paying $500 rent. And what we virtually do is use that rent on top of that deposit and recalculate the interest. So if you like, they get a bonus, an interest bonus on their rent. There's ways to manage it through LMI. Obviously, our data sets are much more complete than the open market. So yes, we do see there's a real opportunity. I don't know if anybody's noticed on our site, but we have a couple of mortgage partners that we're working with at the moment at a very high level. But the future of integrating a mortgage solution into RentPay, very much so. Novarti's interesting, great guys. We work closely with Novarti. Yes, they're going through their banking side of it. I'm not sure where they are in the mortgage side of that, but certainly we speak to Novarti. But the summary there is, I do see mortgages as a real opportunity to help our customer. And of course, if we've got a renter that's accruing a virtual advantage to a particular provider, when they do hit the market, they're already pre-aligned. So it's essentially moving that competitive step. We think that's, to be honest, I think that's huge.
The next question is around marketing. So what does Rent think of the recent marketing activity for generating more interest as opposed to previous marketing? I.e., what has changed with marketing, and if so, why?
So our marketing's, we've been doing a lot of, I guess my marketing people will kill me, but we've been doing a lot of, I guess, testing, trying different things, creatives, language, imagery, channels, to try and work out where the best bang for buck is. It may surprise people, but not everybody knows of rent.com.au. So just on our portal business, there is an awareness challenge there as well. You know, we're up against REA and Domain, which both have large, media partners. So we don't have that. So we're a little behind the eight ball. The flip side of that is that our biggest segment, our metro techs, as we call them, the under 40s, they don't consume a lot of mainstream media. So they're in different channels. They're in, social media, etc. So we're exploring and opening up a lot of those. I would hope that most people, well, I know that we've increased our activity in social media quite a bit. We've also increased our activity towards agents. So we're getting there. We're not spending hundreds of thousands of dollars or anything like that. We're still testing and playing around. As we land some of the new features and new functionality of RentPay, there'll be a campaign around that as well, because a large part of RentPay's role is to educate. We need to tell people about it. So we've got a bunch of activities planned coming forward. They're generally synchronized around major product upgrades or feature sets.
Yeah, so if I could just add to that. So I think in summary, previously, and certainly on the search portal, our marketing has been very sales focused. So it's a direct cost of sale, whereas a lot of the marketing now is about that brand building and education piece. The Next question is, when you partner with an agent, is the end user, the renter, still paying the full bill for rent pay, or is there a shared cost with the agent?
There's variations to that. So we charge $2 a month for rent pay. There are some agents that are choosing to absorb that cost themselves. There are some agents that are passing that on, and there are some in between.
Thanks, Greg. The next question regarding the announcement on the 13th of January regarding the capital raising, to be supported by our larger existing shareholders is fantastic. Are any of these holders in the top 20?
Okay, so Jan's our COO and also Moonlights is our CFO, so he will correct me if I'm materially wrong here. But in our top 20, board and management couldn't participate in the raise. Outside of that, I'm going to say all of our top 20 participated in the raise.
All of the participants were in the top 20.
Okay, so it's a different way of saying it. And remember too, that raise, we didn't do I guess the follow-up question to that is we raised it slightly above market, and hence why we didn't do a full rights issue.
The next question is from Brett. I don't know, I know you haven't really ramped up marketing spend for RentPay yet, but I'd expect to see some organic growth from word of mouth, etc. Why aren't we seeing any evidence of this growth in the App Store? The number of reviews basically hasn't moved in 3 to 4 months, especially given the onboarding of new agencies.
Yeah, that's a fair question. I also monitor the App Store myself. Where we're seeing the growth right now is through our web. So we launched RentPay in both app stores, and then we followed up with the web. The way the onboarding process is at the moment, specifically around ID verification and whatnot, it feels somewhat logical that a person would choose to do that on the big screen. And that's what we're seeing. So we're seeing, I don't have the stats right in front. It's about 50%, and most of that's recent 50% coming up through the website. The people that we're onboarding at the moment, it's really interesting actually when you look at the user flows through RentPay and whatnot. So RentPay today is really something you set up, and then you don't really need to go in and look at it again because it's all automated and it's working fine. So the App Store ranking is a combination of downloads and obviously usage as well. So some of the features and whatnot we're building in there, it's quite an interesting conundrum. Do you completely design your product so that it sits there in the background and you never have to do anything? Or do you try and put in there, rewards and features and whatnot so you get high usability? I think the answer is somewhere between the two. We'll have some users that will set it up once and never look at it again. And we know there are people that are doing this. And part of me thinks that's a great tick, right? So we would expect a user to come back in when they're changing their property, for example, or if they want to change their banking details. But as we add in extra features, and we're doing that as we speak around paying other bills, other utilities, services, you need to pay the water bill to the real estate agent, then we'll start to see that the use case for RentPay start to improve. It's a good question though, but yeah, the short answer is a lot of the growth has been absorbed by the web because it's just a larger format screen. And the web experience is identical to the app.
The next question is from Seong. RentPay is taking a lot of investment. How are you doing for cash?
So we just did the raise. So cash-wise, we're good. Yeah, I don't have much more to add to that. I think what did we
raised 2.5 million, and we had 1.6 in the bank at the time.
Yeah. So yeah, look, we're pretty happy where we sit. As I said, we're mindful of acquisition opportunities. We're keeping an eye out. We think there's some good stuff there. It's just a matter of case. But for running our business, spending what we need to spend to get RentPay to a material contributor to our business, we're good.
James had a similar question, so I think that answers your question as well, James. The last question I have in front of me is from Tara. You've previously spoken about ARPU for RentPay. What is it, and how do you expect to grow that?
Currently sitting around $3. Jan's staring at me, nodding, so I'm correct. Look, there's always been two variables for RentPay success. One is the number of people using the product, and one is the ARPU. So the ARPU side, we see that coming through additional products and services. Utilities is a good example of that. So at 10% market share, which is our 2-year target for RentPay, at 10% market share and people paying their utility bills in line with their rental frequency, that generates a $50 million a month cash flow benefit to a utility partner. We would expect some of that benefit to be paid back to the renter, and we would also expect some of that benefit to come back to rent. So it's through partnerships like that are one major driver for ARPU going up. The other one is additional products and services. I don't know if anybody remembers back to, we used to have a rent insurance product, contents insurance. Our contents insurance product was the best product in the market at the time. This is 2 years ago. Partnered with Chubb, $10 a month for contents insurance, which is designed for a renter, covers your valuables, breakables, and mobility. It was the world's best product. We could not sell it. We were selling one a day. And the reason for that was that we had people coming to our website looking for a property. It's a stressful situation. They're generally under time pressure. And they just weren't thinking of anything outside products and services that help them complete their primary function, which was the move. So whilst we had a great product there, we just didn't have a good place to put it. So with RentPay, we've got people now that are in their tenancy period, the heat of battle, if you like, of getting your properties passed. So now we see that as an opportune time to reintroduce those sorts of products. So there'll be additional products that come through that'll also drive ARPU.
Thanks, Greg. We don't seem to have any further open questions, so we might wrap it up there. As always, remind you that you can send questions via email to investors@rent.com.au. Please sign up at our investor center, which is www.investors.rent.com.au for any updates going forward. And thank you very much for attending this session today.
Thanks, everybody.